Italy is in a financial hole, so it seems is its largest bank. Profits at UniCredit have all but evaporated and capital has shrunk to dangerous levels. The bank made third quarter losses of €10.6 billion. There'll be no dividend payment for 2011 and the bank will retreat to its core business, possibly exiting its equity sales and trading businesses in London. UniCredit is Italy's most internationally exposed bank, with operations in 22 countries. It said the loss was due to €9.6 billion of goodwill write-downs. UniCredit shares were suspended before the results were published. They fell 9% when trading resumed.
It tells me you don't believe that's going to happen.
Well, I'm watching a bank run, you know. There's money running out of Italian banks at the moment because, and they're a very wealthy country, because they know, they've seen this pattern before. We've seen it in Portugal, we've seen it in Greece, we've seen it in Ireland, and it's started the same pattern. Oh, this isn't happening to us pattern, and all the positive noise is coming about the Italian economy to talk it up. The reality is that money is going in the opposite direction. Investors are not putting their money into Italian bonds. I'm lessening all my client exposure towards Italian bonds over the last few years. I've been scrambling to do this, the worst, just so people will understand, because I think people need to be told the truth. The truth is that if Italy is bailed, if Italy fails, we're looking at economic Krakatoa, right? We're looking at a run on the European banking system. Money flooding out of Italy by wealthy people will automatically create a contagion, a run out of Spain, Portugal, Greece and Ireland to so-called safe havens.
Surely they won't allow Italy to fail, though.
But
they can't afford to allow it to fail.
But everybody is, yes, and that is the backstop we're all hoping for. But you have to have Plan B ready. That's what people are doing. They're not. I mean, at the moment, economics is being run by politicians. That's a scary place to be. You just have to have a look at our crowd to understand that. And they're the same worldwide. Now, so you have to have Plan B. Now, what people don't get is they see the volatility on the bond market and they listen to the headlines and they get bits of it in the Irish media. But they just don't get it, that this is all about the banking system, that the bond market is a proxy for the banking system because banks hold bonds.
But the European banking system is shot, Eddie. We know that.
It is. So if Italian bonds market fall dramatically in value, that's a quarter of the European bond market falling in value. That puts huge strain on European banks, many of whom may not be rescuable by their own governments, because those governments themselves are up to the limit on how much money they can borrow to pour money into their own banking system. So you may have a situation where you get a wave of banking collapses, some of whom, who are not deemed to be systemic, will be allowed fail. Now, that creates a panic, a huge bank run across Europe, which would become a global financial event, which would dwarf what happened after the Lehman Brothers collapse. And in a situation like that, we just don't know where we'll end up afterwards. Because the core problem underneath all of this, when you whittle it down, is that we simply are not getting enough growth in the developed world economies to pay our way out of all the debts that those economies have built up by making promises that are undeliverable to public sector workers throughout the global economy, throughout the developed world, and other promises that can't be met by the growth. So there's a great rebalancing, to borrow that awful term, that needs to go on probably over a decade.
Okay, without going into an apocalyptic scenario, what's the sort of the least worst scenario? The thing that most realistically will happen in your opinion?
Listen, everybody wants this thing not to happen. Right? We all want the European debt crisis to go away. The facts are it won't go away so long as the Germans have their boot heel on the forehead of the ECB saying you cannot print money, because the Germans are absolutely horrified of hyperinflation.
But if they don't allow that, Eddie, they're going to have to bail out everybody, and they can't afford to do that.
Well, the point is there isn't a solution. That's why I'm saying you need a Plan B. And the Plan B is to recognise that we are now at an elevated risk of the collapse of the euro itself as a currency. That's just a blunt statement of fact. And consequently,
well, if they felt that Greece could damage it and bring it down, then Italy going bang will certainly bring it down.
Italy is unsavable unless you get massive international intervention. And will it arrive on time? Because this is all about confidence, and confidence is being destroyed slowly because consistently European political leaders have been behind the curve. They've been behind the pace of events, and once again they're behind. Right now what we're seeing in Europe is that they've lost a grip on the situation. That's quite clear. It's now purely in the hands of markets and how markets read it. So what I would say to people is, if you have any cash at all, you need to very seriously consider getting some of that cash out of euro and out of this jurisdiction.
And putting it where?
Well, the ideal safe haven, unfortunately, despite its price, is gold. But there are other things that you can do. There's Australian dollar liquidity funds. There's other places you can put money.
But sure, if we all start taking our money out of euros, isn't that going to add fuel to the fire and only exacerbate the crisis?
Sinead, as I speak, right, anybody that has access to any type of informed advisor, in other words, wealthy people, are doing this in Italy. They're doing it in Spain. They're doing it in other countries because they are reading the tea leaves exactly as I am reading them and many others are reading them. The problem is that there is this sort of consensus commentary going on that it will be all right. So ordinary people are saying, well, we're being told by our betters that it's all right. The facts are that wealthy people are doing this as I speak. They are moving their money. Follow the money.
Follow the money. To gold?
Gold would be one safe haven. No, I'm not trying to create a panic. I'm just simply telling people that if Italy fails, this is an economic event that we haven't seen in the last 100 years. And what it shows us is that the whole Keynesian model of banks creating, multiplying and gearing and all the rest of it has been an utter failure. And we know already, because if you look at stock markets are in a bear market for 10 years. There hasn't been any fundamental economic growth for 10 years. We've had 2 major crashes, and I see another one around the corner if this problem isn't solved.
OK, Eddie, we'll leave it at that for the time being.
Thank you, Eddie.
Good evening. So just this weekend, financial advisors to the German government reportedly admitting the EU rescue fund won't be enough to save Italy if it slips into crisis. Now, it's the EU's third largest economy. If it does default, what then?
Well, look, I mean, what the Germans have said is just something that we've all been saying for months and months and months, but nobody wanted to realistically appreciate. Let's try and understand the size of the numbers here. The Italian government owes 1.8 trillion euros. Now, that means nothing to anybody, but that is bigger than the total government debt of Ireland, Portugal, and Greece put together. Before the end of this year, Italy needs to sell bonds, debt, which is equivalent to the whole of the Greek government bond market. In other words, all of the Greek debt that we've been talking about for weeks and weeks and weeks as being a huge crisis. Italy is huge. It is just too big to manage to, in any way, be rescued in the way that other economies have so far been bailed out by the EU.
So if the worst does happen, what you're saying is Italy's too big to rescue. Well, hang on a minute. It's always easy to talk with hindsight, I suppose, but it wasn't it too big to be accepted into the Eurozone club in the first place if it was ever too big to rescue? How did they invite it in?
Well, this is the appalling thing that happens when politicians get involved in finance. Because actually, Italy should never have been able to join the euro in the first place because it owed far too much money. But ultimately, the rules were bent and changed, and people allowed things to be fudged on the application forms, just as they did with Greece, incidentally. And ultimately, they were able to say the euro is a political success. And the problem now is the hard-headed economic reality has finally reared its ugly head. The markets are scared, and actually we have no political leader who's actually willing to admit just what a crisis we're in at the moment.